afternoon, everyone. I'm Emma Steeley. Welcome to the second session of the day from Equifax and AccountScore. I have had the pleasure of working with Oakbrook Finance for the last 3.5 years. They were certainly early adopters when it came to bank transaction data analytics, and I'm thrilled to have the CEO of Oakbrook Finance, Luke Enock, join us today. Hi, Luke. I've known Luke for the last 2 years, and I knew that he was an advocate of the power of open banking data and how it can provide improved lending decisions. When he joined Oakbrook as a CEO, he embraced the opportunity to accelerate the use of open banking data analytics over the course of this year as the world of lending fundamentally shifted during the pandemic. So without further ado, I'll hand over to Luke, who is going to share with you the incredible insights that Oakbrook have as they accelerate digital transformation with open banking. So Luke, it's over to you.
All right, thanks Emma. Thanks for the warm welcome and good afternoon, everyone. All right, so let me first start then with a little intro to Oakbrook Finance for those of you that aren't familiar with our business. Introducing Oakbrook. So we're a consumer lending and technology business. We were founded in 2011, and really at the heart of Oakbrook is a set of capabilities founded around technology and analytics. And over the last 7 years, under the brand of Likely Loans, we've lent just north of £600 million. We're about 140 people, prior to lockdown, located in Nottingham, currently dispersed across the country. But it's a business that's been around for a number of years, but at its very core is technology and analytics. So today I was asked to come and talk a little bit around our journey in open banking. And as Emma said, I'm a huge advocate of open banking. So let me share a little bit around how we see and how I see open banking being a critical part of the vision for Oakbrook. And so I've broken this out into a number of items, and I'll just share a few of those with you. So first and foremost, I see open banking as an integral part of how we do lending. So that's across scorecards and strategy rules. And I see open banking forming an integral part of how we build out multivariate journeys. So journeys that are personalized, journeys that isn't a one size fits all. And that requires a certain level of technology capability to achieve that. Top right, open banking being an integral part of affordability assessments. And that's probably where most of you listening are thinking about open banking playing an active role. Yeah, absolutely it does. But I see it doing more than just that as well. Then we've talked about open banking being an integral part of affordability, but not just at point of lending. I see it as something that we should be doing on an ongoing basis, and ongoing consents with open banking allow you to do that, which then obviously leads you into the opportunity to be able to intervene early in a customer's journey with you. And avoid those situations where customers do fall into arrears. So early interventions is a key part and component of this. And then latterly at the bottom, open banking being a key component of someone's credit score. I think a lot of companies have relied on credit bureaus to provide credit scores, whereas in reality, most companies base their decisions not on a bureau score, but based on their own proprietary scores. We're no different. The only addition I would say is that we would see open banking be an integral part of that score as well. And then finally, I&E solutions. So clearly, when customers do fall into financial difficulty, it's really important that we understand their circumstances and we get right to the bottom of their current financial situation. Open banking can play a key part of that. It's nuanced, it's slightly different from affordability assessments at the front end. The level of detail that you go into is far greater in I&E, but open banking can play a critical part of that process. And so look, they're the 6 elements that we talk about within Oakbrook. clearly that's a view of the future. I thought I would now share a little bit of where we are today. We started open banking, as Emma said, nearly three years ago, and where we started was really in a process of a value exchange with customers who would apply with us, and under normal circumstances we would decline. Customers were offered a second chance to apply with us by granting access to open banking. And what we found is that actually 45% of customers would complete that open banking journey end to end, which actually is a pretty good number, given that, that there's a range of areas where customers drop out. In the main, 9 out of 10 customers actually wanted to start the journey, so a very high take-up rate. There were a number of reasons why customers would fall out. That could be due to historically, not having access to passwords, etc., for their online banking. That's been made easier now with the passport through to your app banking. And some of the banks still don't provide an API in this space. But end to end, we get about 45% of customers who complete that part of the journey end to end. And what we then found was we would get about a 40% approval rate, and excitingly, a 25% improvement in our loss rates. So as a second chance process, open banking was a clear success for us. However, this is something I inherited when I joined the company. This is work that the company had already started, and it was a good starting point. But the reality was the amount of customers going through this journey was about 1% of our customer base. So whilst a great first start, in terms of its overall impact and influence on the business, it was relatively modest. So let's flick forward through to what we've done since then. So I'll describe the 3 items, and then I'll give you some examples. So first and foremost, personalized affordability assessments. So we absolutely do take bank transactions, and that enables us to accurately assess someone's income and personalize their expenditure information, which is far more accurate and tailored to the individual than perhaps using credit bureau or Office of National Statistics or just the application form questions. Second one is around enhancing credit risk decisioning. We see, and for those that work within banks, this won't be a surprise because they have access to a lot of this type of information, but open banking data and the bank transactional data adds a huge amount of power above traditional credit reference agency data. And I'll give you an example of that in a second. And then behavioral nudges. With ongoing consents, we are able to see how customers are managing their finances and provide behavioral nudges to customers to try and avoid them falling into financial difficulty. So I'm going to give you a couple of examples. So this is a bespoke variable that we created, and I guess what I've done for the purpose of this presentation is make this nice and simple. We have more complex elements that we've built, including scorecards. But for the purpose of illustrations, this is one bespoke variable that we created. And depending on true or false on that variable, we can clearly see there's a near 2 times the credit risk performance separation. So for a variable to split risk, this is a hugely predictive variable, and that's over and above our credit score that we would use prior to this information. So it's a huge risk splitter. And for all of you that think about open banking primarily in the context of affordability, I wanted to demonstrate the power of open banking in enhancing credit risk decisioning as well. And then this last example, which is pretty hot off the press, and is something that we've been working towards. And I think a lot of you will be wondering how to use open banking in the context of aggregator journeys. And so this is an example of something that we've been building and have just launched. So starting on the left, the customer has already consented to open banking with the aggregator, including the customer obviously giving consent to use open banking data for lending offers. The customer uses the aggregator then to search for lending offers at their leisure. That information, so their application information, the bureau information, and the open banking information is passed to us, and we would then, within the parameters of returning a response to the bureau, return that with a personalized pre-approved decision. So we do all of the orchestration, all within circa 5 seconds to provide that offer. I think this is the first time anyone in the UK has been able to combine open banking data with bureau data, with application data, all in a seamless journey, all returned to an aggregator within 5 seconds. So there's an example of some of the progress that we're making on the customer journeys. And as that consent level increases with aggregators, the more prevalent this journey will be, the more personalized, the more accurate the decision will be. And that's, I think, where everyone wants to get to. So a great example of, or 2 examples of some of the progress that we have made. So look, I'm going to pause there, and hopefully that gives you a bit of a whistle-stop tour of our ambition with open banking, where we've come from, what we've achieved so far, and where we want to go.
That's amazing. Thanks so much, Luke. For me, like what you've just shown truly demonstrates that open banking is not just like a one-trick pony, like you say, with affordability. It's a critical tool for lenders that really gives that 360 view of the customer, and I think as regulation continues to say to firms, do better, do better with your affordability, do better on creditworthiness, forbearance. For me, open banking is that how that shows you how to actually, how you can actually do better with that. And for me, it's clearly defined that open banking data analytics can really drive that decisioning. So, you've spoken in depth today about the benefits that you're seeing as an organisation from the analytics on the open banking data. So just to fire some questions your way on it now, Luke, what I'd really like to understand is also what challenges you've experienced and how you have or are continuing to overcome them.
Yeah, so I'd probably describe a couple. So one is the take-up rate with customers. Clearly, there's a dropout with asking customers to provide consent to go through the open banking journey. But we've found that we can make significant improvements in the way in which we describe what open banking is, give reassurance about the security element of open banking, and make that journey much easier. So that there is no silver bullet to that. It is some hard yards, but you can absolutely make a big difference in your consent rate by putting in some effort around the customer journey. And then the second one is around the data side of it all. It is an awful lot of data. And if you literally just turn on open banking and flood yourself with that data, there's an awful lot of responsibility having collected it to do something with it. So one of the things that we did to overcome that was to create multivariate journeys, which then we could control how much volume we would put down open banking. And then within putting down a contained amount of applications through open banking, then allowed us to go through an iterative loop of sending it all to manual underwriters. So this was a pretty tough journey, an expensive journey, but you put it through manual underwriters, and you literally sit your decision scientists and your credit risk folk with the manual underwriters who convert what the manual underwriter is looking at into algorithmic solutions. And it does take lots of iterations. And a good example would be income. You'd think income would be relatively simple to get to the bottom of. And actually Yeah, it's not at all. We found that we ended up creating for one individual, their income we would create roughly about 190 times, and there was all sorts of algorithms to patterns to look for to try and give us the very best view of what their latest income is going to be, with the evidence that supports that. And so that's an iterative process, and what we've managed to achieve is slowly over time, reducing the reliance on manual processes and building all the algorithms to make it automated, which is why we've now got to the space where we can now work with an aggregator and return the information within 5 seconds.
Yeah, which is massively impressive. And I think on that, actually, yeah, I mean, if I put sort of my old sort of lending head back on in terms of, where we've spoken to clients, and, the fact is, yes, the regulator wants people to use open banking data, but they haven't seen this data before. So you have to get used to using it. One of the things we've actually done, I mean, and you guys didn't actually benefit from this because you've been doing it for so long, but actually in the last, a couple of months, we've actually now put together like a transaction data kind of analytics pack that is kind of anonymized. So it's actually starting to give almost like a retro to lenders that haven't been using the data before, so that they can actually start to get a view ahead of collecting the data. But obviously it's been a lot of work on our side being able to get to that point as well. But yes, it's very much a case of, I think you have to start collecting that really getting into that data and getting that insight on it before you can really obviously roll it out as you guys have done now.
Yeah, I was tempted to say don't help everyone too quickly, but actually, to be honest, in my view, things like affordability and open banking requires an industry to move. And that's one of the reasons why I'm speaking today. So I say that tongue in cheek. Really, actually, I would be very happy to talk to anyone around the experiences that we've had, because it's only through the industry moving and adopting open banking more that we as an industry will be better at what we do.
Absolutely, and obviously we've been working together for some time now, and you are obviously one of the consumer lenders who've got the most experience in using the open data analytics that are available. So really, is there any advice you'd give to the organisations that are looking to utilise data for the first time, and what kind of things should they actually be looking out for in the first instance?
Yeah, so I would say try and control the size with which you start with. Because I think to try and get an organisation to move towards using open banking, it can be too daunting to suddenly talk about all your applications suddenly having all this transactional level data. And so I think the best way to move a culture and move an organisation is try and box in the size of the challenge. And you can do that by what we do, which is creating those multivariate journeys. And don't expect it to be the answer for tomorrow. It does take a bit of time to learn your way through this. And so also have a level of pragmatism around how quickly you can get to the results. And then what to look out for. I think the obvious place that everyone will go towards is looking at things like disposable income, expenditure, income calculations. I would say, of course, that's really important. And of course, that's something that you should prioritize. But don't just look there. Open banking's got huge commercial value for risk segmentation and so on. So for all of the credit risk folk out there, also see it as a big opportunity for them as well.
Great, thank you. So, you've continued to accelerate digital transformation and growth at Oakbrook in the last 6 months. So now what is next for Oakbrook?
Yeah, so look, we have a really clear purpose for Oakbrook, which is to simplify and personalize borrowing. And I'm very proud of the capabilities that we have built. So we've built lots of analytical capabilities, lots of technology capabilities. But I think the next stage for us is to bring to market far more customer-centric propositions. So expect to see lots more propositions, more innovative propositions that I think really translate into better customer outcomes, proof points for better customer outcomes, and a range of different brands that go alongside that as well. So an exciting journey.
Yeah, sounds like super exciting stuff. So, yeah, really all that remains for me to do is thank Luke for being so candid today and delivering such a great presentation. Yeah, I'm sure that for lenders who have been yet to be convinced on the advantages of the analytics on open banking data and the implementation and the rollout of it, that Luke has certainly given you guys some food for thought. So thanks very much to everybody. Thanks again to Luke, and we'll see you soon.